Hi all. This is just a small video explaining one recent requirement which has come from few TPS and insurance providers. This is regarding a certificate under Section 17. Okay, so a lot of hospitals has already received an email asking for certificate under Section 17. So let's understand what is Section 17 of IT Act, so that whether you require it, if you want to procure it, how to go about it. So here I'll be taking you through a bit of web links, few web pages which describes clearly what is this certificate and what is this for. So starting with the email that we all most likely we received, I received it from Paramount TPS services. Now, what you should understand is that here, uh, if you see the screen, this is the valuation perquisites of an employer-employee relationship. So here, what happens is a medical facilities which the employer provides the employee, and the expenses related to it is exempted from taxation. So, what are the prerequisites for this is that the expense incurred and reimbursed by the employer for the medical treatment of the employee or his family, uh, it is to be undertaken at hospital maintained by the employer, hospital maintained by the government or local body, or a hospital approved by the principal chief commissioner of the chief commissioner having regard to the prescribed guidelines for treatment of the prescribed diseases. Okay, now this is what this medical facility provided to the employee from the employer comes to play. Now let's see what are the different diseases which are specified in this. So this comes under the rule 3A of income tax rules, which covers a lot of conditions. Out of that, I'm an ophthalmologist, so what concerns me more is this part. So here you will see ailment or disease of the eye, ear, nose or throat requiring surgical operation. So most of our surgical interventions of the eye, if a patient undergoes a treatment at a hospital, which is approved by the Income Tax Commissioner under Section 17(2). So that amount of money that has been spent by the employee at the hospital, which is reimbursed by the employer, is applicable under tax deduction. Okay, this is what this section overall means. So in order to, from a hospital perspective, when you look at it at a hospital perspective, what it comes to is that, so from a hospital perspective, when you come to this, so for a commissioner of income tax to approve a hospital under this section, so what are the requirements that the hospital should have? So these are the different criteria under which this is judged. So if you look at this, there are few from an ophthalmology point of view purely. Here there are few conditions which majority of the eye hospitals won't fulfill. That is at least 10 swing beds provided to the patient, the OT spaces, and the requirement of this part, especially a high pressure sterilizer, oxygen cylinders, pathology laboratory system, ECG monitoring system. These facilities are generally not available in eye hospitals. So very less eye hospitals will actually qualify to get this certificate in the first place. So even if once you qualify, then what they do is the Income Tax Commissioner issues a certificate which looks like something like this. So this is a certificate issued to one hospital in Ranchi, which says that this hospital, Raj Hospital in Ranchi, is being granted this permission to undertake treatment for patients, and the treatment undertaken at this hospital can the amount of money paid for this treatment can be deducted from the taxable income of the employer. Remember that. So In order to get this certificate, the quality criteria for the for issue of the certificate by the income tax commissioner is a bit stringent, I would say. And these conditions which are there are pretty much old regulations. Now, see, now what happened is, initially when income tax department was issuing these certificates, that was a time when a lot of PSUs or any other governmental institutions who were providing reimbursement for their own employees, they found it an easy way out. They said, okay, if the income tax department has approved your hospital, we'll also approve you. That's it. So what I understand from this email that we are receiving from a lot of TPAs recently regarding this particular certificate is because these TPAs also handle claims from PSUs like NTPC and Coal India. So these PSUs or institutions require the hospital to have the certificate according to their rules. So the TPA is trying to make the hospital also, all the hospitals in its network comply to those rules, so that the network of hospitals where they can cover for treatment for these people from PSU establishments can be increased. The network can be increased because uh, for my hospital, my own hospital in Hyderabad, does not have this certificate from income tax department. So what it does is, my hospital cannot undertake treatment under this section, under whichever PSU has asked for the certificate for empanelment. So for those patients, I will not be able to undertake treatment through that particular TPA. So summarizing this entire conversation, so the section 17(2) certificate issued by income tax department for a hospital is to uh, provide medical treatment to patients, and that particular treatment cost can be claimed as an exemption by the employer of the person who is paying for that treatment. Okay, provided the employer is reimbursing the employee for this amount. Point number one. Second, in order to enter into this list for a hospital, there are a lot of quality requirements. If those quality requirements are met, then only the hospital will receive this kind of a certificate. Now, depending on the local income tax commissioner, that is the state wise and city wise, so or the circle wise, so the validity of the certificate which I have seen is different. Some places there is no validity mentioned. In some places there are 2-year validity. Some places there are 3-year validity. But however, most of the IO hospitals will not qualify according to their criteria. We need to look into something, so that we need to look into some action, so that we can revise these criteria to include daycare centers as a separate entity. But as of now, as of today, that is not there. So the immediate action, what as far as the emails that we are receiving from TPAs, is that to plain and simply say that if your hospital doesn't have it, tell them you don't have it. Just that you will be missing out on the patients that is being from the empaneled PSUs like NTPC and all. Other than that, it doesn't have any other connotation. One assumption is that if you look at the current tax regime which have been implemented, a lot of deductions have been taken off in the new tax regime. So it's very, very likely that this deed of the certificate is going to become obsolete soon, and it is going to be more global, because since this deduction doesn't happen anyway anymore, so the requirement of the certificate may just disappear automatically. And otherwise, what we can do is, as in our professional associations and bodies can take it up, so that even daycare centers are included in this certification process and this list. So we need to revise this whole conditions that is there. So we need to revise this entire whole conditions, because otherwise a lot of eye hospitals and a lot of daycare centers, even not only eye hospitals, even there are dedicated dialysis centers where patients undergo treatment. So these kind of they will miss out on the financial benefit by the employee and employer. So this is the crux of the matter. Rest, please feel free to ping me up for any queries.